You're about to make a big purchase, and if we're being honest, you're not just buying the thing, you're buying the feeling you think the thing will give you. Relief, pride, comfort, status, convenience, motivation. And that's exactly why big purchases are dangerous. Not because big purchases are bad, but because they're where people accidentally lock themselves into a financial future they didn't mean to choose. So today, I'm giving you a simple system you can use before any major purchase, not a don't buy it lecture. A decision filter so you can buy big things on purpose, without turning your budget into a hostage situation. Quick note before we start. This video is for educational and entertainment purposes only. I'm not a financial advisor, CPA, or attorney, and this isn't financial, legal, or tax advice. Full disclaimer is in the description. All right, here's the system. It's called the Decision Memo. Before you spend big money, you create a quick memo in your head or on your phone with 5 lines. If you can fill out these 5 lines, you're ready. If you can't, you're not buying. You're reacting. Let's walk through it. Line 1 is purpose. What problem does this purchase solve? Be specific, not I want it. What does it actually do for you? Does it save time, reduce stress, replace something broken, create income, protect your safety, improve health? Or is it mostly entertainment? Because the more vague the purpose is, the more likely the purchase is emotional. And emotional purchases tend to be expensive twice. You pay with money now, and you pay with regret later. So write the purpose in one sentence. If you can't explain the purpose cleanly, pause. Line 2 is total cost. This is where most people mess up because they only look at the price, but the price is just the entry fee. Big purchases usually have a tail, costs that follow you. Setup, maintenance, repairs, subscription fees, accessories, insurance, fees, financing costs. So the memo asks one question. What is the total cost in the first year? Not the monthly payment. The first year total. Because that number exposes reality. Something that feels manageable can turn into a budget leak once the tail hits. And if you can't estimate the first year total, you don't understand the purchase yet. Line 3 is funding plan. This is the most important line. How exactly is this being paid for? Cash from where? Savings from which bucket? If it's financed, what's the payoff plan? Because saying, I can make the payment is not a plan. That's a hope. A plan sounds like, this will be paid for by reducing X, saving Y per paycheck, and paying it off by Z date. And here's a rule that protects people. If you need to finance something that loses value quickly, you need to be extra careful. Because financing turns a short-lived benefit into a long-lived bill. So your funding plan should answer one more thing. What does my life look like if my income dips for 60 days? Because that's real life. Hours get cut. Overtime disappears. A bill hits. A car repair happens. A kid needs something. Life happens. If the purchase only works in a perfect month, it's not affordable. Line 4 is risk buffer. This is where you protect your future self. Ask, what's my cushion after I buy this? Not just money in the bank. A cushion. If something breaks next week, do you have room? Because if you buy this and your savings drops to 0, you didn't buy something. You traded stability for stuff. So the memo asks, after this purchase, do I still have a buffer? And if you don't buy yet. You build the buffer first. Big purchases are supposed to add to your life, not add anxiety. Line 5 is exit plan. Most people never think about this, but smart money always asks, what's my exit if this becomes a mistake? If you hate it, can you return it? If it breaks, how are repairs handled? If your situation changes, can you sell it quickly? And if it's financed, what happens if you need out? If there's no exit plan, you're trapped. Now, once you have the 5 lines, purpose, total cost, funding plan, risk buffer, exit plan, you run one final test, the 48-hour test. You wait 2 nights. Not because you're weak, because your brain is a salesman when you're excited. And 2 nights gives your logic time to catch up. And here's what you're looking for. Do you still want it when you're calm? Do you still believe the memo makes sense? Or did the excitement fade? If it fades, it was impulse. If it holds, it's a decision. Now let's make it real with a few quick examples. Example 1, a big home upgrade. If the purpose is, I want my place to feel nicer, that's valid, but now you do total cost, not just the price. Delivery, installation, extra parts, maintenance, potential damage, return policy, then funding plan. Are you paying cash, draining savings, or financing it? Risk buffer. Do you still have a cushion after? Exit plan. Can you return it, resell it, or are you stuck? Example 2. A trip. Purpose, rest, family time, experience. Total cost. Travel, lodging, food, transportation, extras. Funding plan. Are you paying as you go, or going into debt? Risk buffer. Do you have enough cushion to come home without stress? Exit plan. Cancellations, refunds. And whether travel insurance actually makes sense. Example 3. A car. This is where people get hit hardest because the payment hides reality. Purpose, reliability, commute, family space, total cost, insurance, fuel, maintenance, taxes, fees. Funding plan. What's the term? The payoff strategy. And what happens if rates are high? Risk buffer. Do you still have room for repairs? Exit plan. If you need out, can you sell without being upside down? The decision memo forces you to see the purchase in full. Now here's the part that saves the most money. Before you buy, do a quick swap test. Ask, if I didn't buy this, what would I do with the money instead? Not in theory, specifically. Pay off a balance, build an emergency fund, catch up bills, invest, save for a down payment, buy yourself breathing room. This doesn't mean you can't buy the thing. It just forces you to admit the trade-off. Because every big purchase is a trade. All right, quick recap. Before any big purchase, write the 5-line memo. Purpose. What problem does it solve? Total cost. What's the first year total? Funding plan. Exactly how is it paid for? Risk buffer. What cushion remains after? Exit plan. What if this becomes a mistake? Then run the 48-hour test. If the memo still makes sense when you're calm, buy with confidence. If it doesn't, you just saved yourself from a future you didn't mean to sign up for. Now I'm curious, what big purchase are you considering right now, and which of the 5 lines is hardest for you to answer? Comment below. And if you want more deep dive, no fluff content on money, freedom, and designing your life, explore the other videos on the channel. And if this video helped you, hit like, subscribe, and share it with someone who needs to hear this. Thanks for your time.